Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trades, we'll use the 5% money management rules and apply stop loss in all trades. The title of this video is Forex Trading on the Edge, Part 2. Alright, this second part is completely independent from the first part, so you can watch part 1 and part 2 separately. Okay, they are not connected, but in the first part of the video that we call Forex Trading on the Edge Part 1, we were analyzing the Euro-USD currency pair, which is the leading currency pair. In this second part, we're going to focus on the dollar-yen currency pair. All right? Let's get started. All right? The first thing I need to say to traders when we are talking about the dollar-yen, we are comparing, the US dollar to the Japanese yen. We are also comparing, the US economy to the Japanese economy. All right? It's very important. Also, when we are talking about the dollar-yen, we are also talking about the policy that are adopted by the Japanese, the Federal Reserve in Japan, and also, the Federal Reserve United States. All right, you know that the Federal Reserve United States was busy printing the dollar and also buying bonds. Now they are trying to scale down the buying of bonds. All right, so we will see. But if the unemployment is not improving, they will continue what we call the quantitative easing. In Japan, the scenario is to allow the inflation to go up a little bit because we have a zero interest rate in Japan for years, all right? And also there is a big problem in Japan. This is the aging of the population. Over the year, the Japanese population was busy saving a lot of money. Now that a new generation is about to start, which means the old generation is about to go, which means the population is getting very old. So there is a bit of change taking place, and the market is starting to adapt to these future changes. All right. Now, before we continue with this discussion, all right, but Forex Trading on the Edge Part 2, I need to say to traders, my trading approach is to combine the technical and the fundamentals, all right? But when we are talking about Forex trading, one cannot use the technical alone. It's almost very difficult to trade Forex without paying attention to the economy news, all right? The economy news I do almost every day, all right? So you can't trade Forex if you don't pay attention to the economy news. You must pay attention to the fundamentals, talking about the macroeconomic decision, talking about the interest rate decisions, all right? These will affect the Forex market. Now, as I said to traders before, we were expecting the dollar-yen to go down, but as the Japanese economy, the Japanese government decided, to start what we call their own quantitative easing, which is buying bonds, all right, which is a kind of a devaluation of the yen, all right, as the yen is devaluing, which means the yen is devaluing, all right. So comparing the yen to dollar, the dollar will start going up because the market is anticipating that the Fed will start, putting up the interest rates in the United States. In Japan, all right, they start buying bonds, which is what the Fed were doing before. So before it was the yen that was going up, people were buying the yen, were selling the dollar, as the Federal Reserve was busy devaluing the dollar. Now we are seeing something else. In Japan, they are trying to devalue the Japanese yen, and we see that the dollar yen was going up. So technically speaking, we were expecting the dollar yen to go down, but if the decision that are made in Japan, is suppressing the yen, all right, that's what I'm talking about, combining the technical and the fundamental. We need to pay attention to the price itself, the number one indicator, all right. What do we need to know for this year, 2014, for the dollar yen? This is about the Forex Trading on the Edge Part 2. As long as the dollar-yen currency pair stays below the level of 10541, you need to know that down. 10541, we must give priority to bearish signal. So this is very important if you are trading the dollar yen. So the dollar yen below 10541, we will give priority to sell signal. Doesn't mean we sell, by all means we sell anyhow. We will take a valid sell signal below 10541, meaning that when the price in a declining channel and rally up to the edge of the declining channel, okay, we'll use a multiple time frame trading method, applying the trading DRAM, the setup, the signal and low risk entry point, and we will give priority to sell signal. If the price goes above, which this year, beginning of this year, we are on a weekly chart now, the price went above the level of 10541, it went to 10544. If it goes above the red horizontal line, which is the the high of 2013, the year 2013, if it goes above that level, 10541, and it found a support above it, which means we want it to go above it first and to pull back and retest it. If we find a support, which is what we call a validation, okay, of a support level, or a conversion of a resistance level as a support level, because when the price breaks above that 10541, we must wait until that level is converted into a support level. Or if we want to buy above that level, we want to buy at a support level, which means the price rally up and then pull back a little bit and then continue the move to the upside. So above 10541, priority to bullish signal. Below 10541, priority to bearish signal. So this is what we want to discuss. It doesn't mean that the price cannot go up below 10541, but whenever we see a valid sell signal below that level, we want to participate in it. Alright? The next key level, trader must remember, is this level here, 10327. 10327 is the short-term equilibrium price level for this currency pair. Now, the short-term equilibrium price level is the short-term fair value for this currency pair, which is at 10327. This is the green horizontal line here, as you can see. You can see it's a key level here. It's a 10327. That's the short-term equilibrium price level. This level will remain in place for the next 2 weeks. Because it's a short-term equilibrium price level, it can change, okay, over a short period of time. All right, this is not a long-term equilibrium price level. This is a short-term equilibrium price level. If the price starts going down from the level of 10541, we need to watch the level of 10327. In normal condition, if the price is above the short-term equilibrium price level, we give priority to bullish signal, and if it goes below the short-term equilibrium price level, we give priority to bearish signal. What is likely to take place if the price is going down from the first level, which is the red horizontal line at 10541, we need to watch the level of 10327, because if the price is going down, the price is looking for a better support level, and the first and nearest support level is the short-term equilibrium price level at 10327. We see that there was a high here on the weekly chart. So what we will prefer if we want to sell is if you want to sell and hold, which means we want to sell, okay, for swing trading purposes, okay, we prefer it to roll it down, or for position trading purposes, we prefer it to break below the short-term equilibrium price level and to retest that level, okay, and to display a lower high or to find a resistance right here, and we will look for opportunity to sell on the edge. The price does not have to do that, but when we see him doing that, we will take advantage of it. If you receive a sell signal after the price breaks below the short-term equilibrium price level and retest it here, we will look for opportunity to sell. All right, here, right here. The next key level that we want to watch is the median line of 2013. The median line is at, for 2013, is the level of 9600. I need to mention to traders that professional traders are trading around key levels. Now, the purpose of this video is not about giving traders, okay, a trading signal, buy today, sell tomorrow, buy today. Because the market is dynamic, All right, there are software being used, okay, to scan the Twitter feeds, the Facebook tweet, the Google Plus tweets. All right, a trade decision are made instantly. All right, it's not like in the past where the news are not coming out, very slowly. Today, hedge funds are scanning, okay, the news as they want to be talking about the high frequency trader. Even they are using software to determine, okay, what the markets, the economy news. They want to be the first to know the major economy news. So decisions are made very, very fast. So if we find a resistance below the short-term equilibrium price level, the next level we need to watch is a 9600, which is the median line of 2013. Now, it's very important for traders to know those key levels down, because if you want to make a swing trading decision, or you want to make excellent trading decision, you want to buy at the value support level, you want to sell at the value resistance level. The best bullish signal is when it happens when the price displays the first higher low above a value support level. The best bearish signal will take place when the price displays the first lower high below a valid resistance level. So these levels are very important for us. So the first level you must not forget is the high of 2013 at 10541. So if this year we stuck below that level, well, we are busy looking for opportunity to sell. But as we are selling, we don't want to forget a level of 10327, which is very close to where we are now. So that's why we need to watch this level, because the price is around that zone now. All right. And if we dip below 10327, the next major key level that trader must not forget if they are trading this currency pair is 9600. This is the median line of 2013. Professionals know these key levels. Hedge funds know these key levels, all right? And you want to know it too, all right? So you can know exactly what's happening, all right? Now, the next level that trader must not forget is the level of 9063. $90, okay, 9063. This is what we call the root smart median line. The root smart median line is the first smart median line at the beginning of a new year. In fact, all right, if you are trading commodity, you are trading stock, you are trading indices, whichever financial instrument you are trading, you must know, okay, the 6 critical price level. You can Google it, trading critical price level. This is an article written by myself, trading 6 critical price level. All right, Google it and you will see the article. Now, so this is the first smart median line, which we call the root smart median line. This level, you must not forget this level, 9063. So suppose, okay, this year has been bearish for the dollar and the dollar is going down. You don't want to forget this key level, 9600, and the level of 9063. It's just so important, because when a price is approaching this level, professional will make decision around this key level, 9063, 9600, okay? And the first one that we are watching now is a 10541. As you can see, beginning of this year, let's see, let's show you what's on the daily chart. Let's go to the daily chart. Hopefully we'll see, you see here? It's on the daily chart, all right? You see? So, this is the beginning of January. You see how the price stuck below that red horizontal line, and you can see that professionals are selling. So how he touched it here, they sold it down. It went up one day. They sold it. Okay, you see, it went up. Now it went up again, green. So anytime the price is running up, some people are selling as long as it stays below the level of 10541. But it doesn't mean that they are selling anyhow. They are selling, okay, within bearish channel, okay, on a lower time frame, okay, using a top-down trading method. All right, this is what they are doing. So this is the hourly chart now. If I want to sell, I must draw my line. You see, straight line here, this point and this point. If you come here and I receive a sell signal, sell it. Okay, sell it now. Because it doesn't mean that the price cannot go up. You see here it went up. So if you don't want to buy, because myself I won't buy in this scenario, because I want to give out to sell signal. So all I'm looking for is the sell signal. any buy signal. If I want to take it, I will be very careful because I know that, okay, this zone is a bearish zone, and I want to give priority to bearish signal. So joining this point and this point, again here, it touches here. If I want to sell on the edge of a bearish trend line or on the edge of the upper end of the bearish channel, step by step, paying attention to the price itself and understanding the language of the price, or the price D below a support level, okay, D below a support level, pull back and retest. Now it's retesting this level. If you receive a sell signal here, we will take it down, all right, step by step. We don't want to force it, okay, we want to, okay, take a valid signal around key levels. And we want to know where is the price going, because this is the problem that a lot of traders get into. Sometimes, you know, when the price is going down, the price is in a declining channel, yes or no. But sometimes the price will rally and people will buy. It can be on a daily chart, on a weekly chart, on a monthly chart. The price may go out for a few months, but if it is in a declining channel, the bearish pressure is the dominant force. All right. That's why we want to know where we are and where we are going. The professional know that we are below this level. They want to give priority to, okay, bearish signal. As the price pulling back down, we see it's come near. If it come near the level of 103.27, they are taking their profit. The bear will be willing to take profit. Some bulls will decide to buy around the level of 103.27. We are not alone in the market. Some traders want to buy it. Some people want to sell it. But we want to know where we are going and where we are. So we are mapping out. We are mapping this, okay, as we talked about Google Map last time. All right, we are mapping the charts. So the support and the price is always going down from A to B. So if we don't know where is the, okay, the target level, where is the next support level, all right, we are trading blindly. Okay, so we will be coming the market anyhow, doing our own thing, but we want to follow the dominant force. All right. Who are the winners? So below the level of 105.41, the bear are winning. Now, as they are winning, if you pull back near the level of 0.3, the bear will pull out because they know that some people will try to buy them. They will wait. All right? They will wait until the price D below the 103.27, which means D below, and come back and retest it. So the support level is kaput, is violated, okay, is disabled. Now we want to convert that support level into resistance level. So now the level of 105.41 is holding it so far because the price couldn't go above it. So far it's a resistance level. All right. So we can look for opportunity to sell below that level. Okay. But as we bring it down, it's coming near 103.27, which is the short-term equilibrium price level. All right. We can take profit, or we need to be careful. We can come out because it's a support level. 103.27 is a support level because the price break above a resistance level. This was a resistance level, then break above it. So we are watching this green line here. Will it be converted into support? Validate this as a support, which means pull back, retest, and turn around. If it validated this short-term equilibrium level as a support, well, the price will go up again back to the level of 105.41. So we may see the price oscillating between these two levels if the market validates this 103.27 as a support level, which it break above it now. It was a resistance before. Now we want to see whether they will convert this resistance as a support. So pulling back and then change the direction again. Then the price may oscillate, which means going up and down between 105.41 and 103.27. If it breaks below the 103.27, we know that, okay, now this is a support level, it must be converted into a resistance level. Once it's converted into resistance level, we are again giving priority to sell signal. Though we say that below 105.41, priority sell signal, there are some support level. So we are bearish up to the next support level until the next support level is also converted into a resistance level, step by step. So if this level is converted into, okay, resistance level 103.27, the ultimate target level is 9600. But before that, there are other key level here, which I don't want to talk about. I want traders to focus to the key, the most important key level, because these levels are psychological level. They behave like a magnet, and this is what the commercial, okay, market participants are paying attention to. All right. So suppose you are, okay, a hedge fund, okay, you are a hedge fund supervisor. You are supervising a group of traders, and in the morning you have your meeting. Why do you tell your traders? All right. So if you are a leading trader, you will say to them, okay, guys, priority to sell signal below 10541. Remember there is a support at 10327. You can tell them that, and trader will understand that. So they will go and follow the instruction. If the price goes above 10541, they know that they need to be careful. All right. So the bearish sentiment is diminishing, because so far the 10541 is a resistance level. The price couldn't go above it. This is the high of 2013, and as the new year 2014 has begun, if the price failed to display a new higher high, which means a new higher high, a high that is superior, okay, to the high of 2013, well, it's bearish to a certain degree. All right. So you see now how what the price doing. So bearish, prior to bearish signal up to the next support level. If the next support level is converted to a resistance level, again we are giving priority to sell signal. But be careful. If the next support level, okay, is validated as a valid support level, the price will change direction again, and we will be heading again to the resistance level. The price may oscillate between 105 and 41. All right. Where there is a value, the price will tend to oscillate. All right. So first key level, note it down. Have a notebook. So you are trading Forex, have a notebook. All right. You can select okay, 10 pages that you reserve for the dollar yen. So you say dollar yen 2013 high, 2013 closing price, 2013 low, 2013 media line, 2013 opening price for 2013 for this dollar yen. So you have this notebook, you have all this key level from the yearly chart. You want to know it because professionals know those key level. So when you are trading this currency pair and it's approaching those key level, you know where you are and what the professionals are likely to do. A support level can be converted into a resistance level, and a resistance level can be converted into support level. As always, we must follow the market pattern. The rising channel, the declining channel, and the horizontal channel, okay, taking valid signal on the edge at a low risk entry point. One thing, I've said it before, though this is a technical analysis, we must not forget Google Finance, we must not forget Yahoo Finance, we must check the fundamental, we must pay attention to the economy news, decisions that are made in Japan, decisions that are made in the United States will affect this currency pair. Unemployment rate in the United States will affect this currency pair, okay? The non-farm data will affect this currency pair. And you want to know, check Forex Factory. This is for Forex traders. All the economy news there for you for free. Check them, okay, all the time, all right? Okay? You see now? So, this is what's going on now. Another thing I need to mention to traders is that some of the stock traders that are trading, okay, stock that are listed on the Dow 30, NASDAQ 100, when this currency pair is going down, they believe that, okay, the stock market should go up. They also believe that if this currency pair is going up, okay, the stock market should be going down. But this correlation is not, okay, reliable, because sometimes this currency pair may be going down, but the market also may go down. So you need to be aware of it, what professionals are thinking of. So some of the stock traders are using the dollar yen as a market indicator, and they are making their decision accordingly. If they see this pair going up, they are implementing their bearish strategy, and if this pair is going down, they are implementing their bullish strategy. But you need to test it for yourself. I do not use the dollar yen as my okay market indicator to make decisions regarding stock trading. All right. So the root smart median line is a key level you want to watch for the whole year. Also, when you're above the root smart median line, it's a priority to bullish signal. But you see now, I say to you, above 9063 priority to bullish signal, because it's the roots line, all right? It's the roots line, the first, okay, line at the beginning of a new year. Though I'm saying that the high of 2013 is the first level that we are watching. We are going step by step until the price, okay, start going up again in a bullish channel, all right? So far, if we don't go above the high of 2013, this is psychological. Professionals know that. They know that. And they're going to apply their strategy like that. As long as it's stuck below 10541, okay, supervisor will tell their traders, priority to bearish signal, up to the next support level. Next support level is converted into resistance, priority to sell signal. Next support level also converted into resistance, priority to sell signal until we reach the roots line. This is a very important support level here, the roots line 9063. If for one reason or another the dollar has become bearish and it reaches this level, be careful, all right? Be careful, because it's a very important support level, 9063. What's happening now regarding the Fed decision? They want to curtail, they want to cut down their bond buying, all right? But they are a little bit afraid because they don't know how this will affect the market. They want to put the interest rates up, but they don't know how this will affect the market. Whether the economy will come back down, or whether the recovery will continue or not. So they are a bit cautious, as they said. So it's more about talking, but they are a little bit, okay, anxious to put the rate up quickly, all right? So you want to watch what they are saying and what they are doing. That's why the hedge funds are paying attention to the economy news. And any talk from the Fed, the hedge funds, the banks are paying attention to it, and they are making decisions very fast. You have to understand that since 2008, the market participants, okay, are a little bit risk averse. They are a little bit allergic, so to speak, to losing so much money, because they have lost so much money from 2007 to 2008. If they know that there is too much risk, they just cut it down straight away. That's why we see the flash crash in 2010. As soon as they know that there is a risk to their portfolio, they will cut it down straight away. And this is the type of market we are trading today. That's why we see too much volatility in the market. As they know, they hear about one economy news, likely to affect their portfolio negatively, quickly trade are closed, decisions are made, and that's why the price going ups and down. All right, this is very important to understand. All right, so these are the key levels that, okay, if one is trading, okay, the dollar yen, one should not forget. All right. All right. So we are talking about Forex, we are talking about currency pair, we are talking about real money, money that people use, money that people care about. All right. This is not just a stock from anywhere. If the dollar is going down so fast, the Fed will take a decision. If the yen is going too fast and it's violating the policy that the Japanese bank is affecting the policy of the Japanese federal banks, okay, they will, okay, make decisions. So we are not alone in the market. Okay, the Federal Reserve Bankers will make decisions. Okay, the Bank of England will make decisions if the pound is going down so fast. All right, this is about the inflation. This will affect the inflation. If the money is going down so fast, the inflation may go up, and the Fed, the enemy of all the Federal Reserve, is the inflation. So they are watching everything carefully. So that's why sometimes they get into trouble when we are talking about technical analysis, especially when we are talking about Forex, because the price display one, okay, pattern will tell traders, this is what we see. The Fed make a decision, the music has changed. This is what we are talking about, the trading triangle, the market first, the sector, before the individual financial instrument. The economy news, the market leaders, and the fundamental can change the technical analysis carefully. I have posted a video recently about this currency pair, talking about 2-4 Elliott wave, okay, YouTube channel. We were talking about the first wave, second wave. But as more decisions are made, which means the Fed, okay, and the Bank of Japan, if the Bank of Japan, okay, continue to buy more bonds in Japan, they are devaluing the yen. And if the Fed is, okay, cutting down their bond buying, the dollar yen will go up. All right, you see? I posted a video about a Fibonacci pattern. And I mentioned to trader that if the price goes above the level of 10541, the next key level that we must remember is 10700. Do you remember that? 10700. That's where a Fibonacci pattern will be completed for this currency pair. Now, all this has been said. We don't want to forget that, okay, the Bank of Japan, okay, and the Federal Reserve in the United States can change the dynamics of this technical analysis. Now, the reason why I'm repeating this is very important because very often traders find it very easy to use technical alone, and they don't want to do their homework, or they don't want to be agile, they don't want to be flexible. They want to use the technical alone, support, resistance, which is great. But while you are using your support resistance, suppose you are swing trading, or you are using a call option, or you are using any other instrument to remain in the market for a long time. And there are times when they, like talking about the Eurozone right now, all right? Recently, they cut their interest rate, all right? And there is a worry right now for deflation in the Eurozone. This is a big concern for the ECB, all right now. These are politicians, these are, okay, politicians that can also, these are also market participants, which can influence, okay, the financial instrument that we are trading. But very often, sometimes, we forget these market participants. The Federal Reserve chairman is a market participant, and the lady, you know that Bernanke is going, and the lady taking over, okay, Janet, okay, will make her own decision, and she's also a market participant. In fact, a highly influential market participant. And we don't want to ignore these people. If you are trading Forex, you need to be very agile, you need to be very flexible, you need to keep your ears on the ground, all right? Google Finance, Yahoo Finance, Forex Factory, all right? This is the key level. So first key level, 10541. This is the high of 2013. As long as we remain below that level, we give priority to sell signal until the price reaches the next support level. The next support level is the 10327. If the 10327 is converted into resistance level, priority to sell signal until we reach the median line of 2013, the level of 9600. The ultimate support level is that the investor, especially the investor, are watching this level, 9063. Okay, you need to be careful. The decisions that okay, the Federal Reserve of the United States is making, the Bank of England is making, the Bank of Japan is making, the Bank of Australia is making, all these decisions can affect currency pair. Talking about the US dollar, the dollar-yen currency pair, decisions that are made in the United States by the Federal Reserve and the Bank of Japan will also affect this currency pair. The economic data, okay, the unemployment, okay, the market sentiment, all right, these are decisions, the non-farm data will affect this currency pair. Do not forget the fundamentals, okay, do not forget the economy news. Though we are talking about, we are technical traders using, okay, the price, the Elliott wave, the Fibonacci patterns, okay, the technical indicator, the CCI, the stochastic. We don't want to forget, okay, the fundamental, and remember other market participants, okay, so we can make excellent decisions to follow the consensus, to follow the dominant force, all right? So what's happening now, all right? What's happening now? So I said enough, so you get the message now, the key level, you want to know them like professional traders. So the price, the price was above this trend line, which I drawn on the blue line. Now we went below that blue line, but this was the ultimate high here on this weekly chart. Now this is a Fibonacci pattern in place, which I told you, if the move continues, we can go even up to 107 level. That will form a kind of a flat correction if the price start pulling back. We will see. As always, when we are talking about Elliott wave trading, traders sometimes, this is what we are talking about. We go one step at a time. And if the price is moving, we are watching the price. We don't force the Elliott wave onto the price. We follow the price. And there are other things that are making the price move. The Fed, the economic data, the unemployment change, these kind of things can affect currency pair. So you may see a beautiful technical setup, But you can see a bullish setup. Suppose we have a bullish pattern today, and tomorrow, for instance, the unemployment in the United States went up big time. What will happen to the dollar? The dollar, people will sell a dollar. And you may say to me, George, what's happened to the bullish pattern? Well, the bullish pattern plus the fundamentals. All right, the bullish pattern plus the economy news. The bullish pattern, okay, and okay, the economy news. These are the things that we want traders to understand. That's why we are saying it over and over. And it's very important. That's why we are saying it. Okay. So the price above went below. Retest this trend line here. Traders have a reason to sell it. And they sold it. The price failed to display. Okay, a new lower low. So for that reason, traders are buying them. Okay. All right, they were buying, but what we know that in fact there was this trend line also here. If you remember, careful, okay, along this level. Now we are out of this small triangle here. All right, we are out of this triangle. So as always for a triangle, trader will use need to be careful so they don't move line. They will draw this line like this as their target level. And as the price out of the triangle, they put it here. So watch the level of, if we go above 10541, the next target will be 10700. That will complete the Fibonacci pattern. But this, as this is, we are talking like this, we do not want to forget the Fed and the Bank of Japan and the economic data. All right, very important. We are comparing the US economy to the Japanese economy. All right, we are comparing the US dollar to the Japanese yen. All right, so do not forget that. So if the Fed is changing their policy, this will affect this currency pair. And the market also, the market is anticipating that the Fed will start raising the interest rate. That's why they keep buying the dollar. They keep buying the dollar. But the music can change at any point. That's why we couldn't see the second wave straight away. They will say, soon in 2014, the Fed has to raise the interest rate. And if the Fed start increasing, they reduce their bond buying, all right, they reduce their money printing. If now suddenly the unemployment start going up and there are some concern, and they start again printing money or buying more bond, you see the dollar will start coming down again. It's the ups and downs that we see in the Forex market, and we must be flexible and we must follow the price. All right, so you see now, so we are out of this bullish channel. But as we are out of it, the price failed to display a new lower low. Now, we are also out of this triangle, but as we are speaking today, the major resistance level that we are stuck now is 10541. If I remove some line here and we go to the daily chart, okay. All right, we go to the daily chart. This video is very important for traders, so they can know exactly what to look for throughout this year, 2014. This video, you must, save it somewhere and note those key level down, go back to it. If you are trading this currency pair, that's why I call this video Forex Trading on the Edge, part 2. In the first part, we were looking at the Euro USD. I will be recording another video that we will call Forex Trading on the Edge, part 3, and we will look at another financial instrument. On this daily charts, pay attention to the line that I draw now. Going to color it now into orange. So from the higher time frame, we are zooming into it. So we want to see what's happening, okay, in the short term, okay, in the medium term, okay, and also in the long term. When we go to the higher time frame, we are talking about the long term, okay, but it's not all about technical alone. Remember that. This is the main key, the most important thing you must remember in this video, because a lot of traders can trade, but they just don't know how to balance the technical trading with the economy news and the fundamental, so they can make excellent decisions like professional and the hedge funds. All right, that's why we are trying to communicate to traders day in and day out. Okay, so here we are out of this channel on the daily chart. So the price now hanging below this a channel now. You see here, you dip below it first, retest it here. Now traders look for opportunity to sell. They sold it for 1 day. It went again near this, so traders are selling along this orange line now. So now today, this is today. Today is okay, the 9th of January 2014. So anytime the price approaching okay, the level of 10541, they are selling it. But you can see some traders sold it nicely on the edge of the orange trend line. So we are out of, though on the weekly chart is still bullish a little bit, okay, as I demonstrated to you already. On the daily chart, the latest channel or the latest momentum, when we are talking about channel, we are talking about momentum, all right? Anytime you draw a channel, if it's a rising channel, it's a bullish, it's indicating a bullish momentum, and we want to give priority to bullish signal. If you see a declining channel, the first thing that should come into our mind is a bearish momentum. When we see an horizontal channel, the first thing that will come into our mind is a balanced market, which means equilibrium between the bearish and the bullish momentum, all right? So we are oscillating between two levels. So now we came out of, when we come out of a bearish channel, when we come, sorry, what I want to say, when we come out of a bullish channel, it's telling us that the bullish momentum is diminishing until the price, okay, start displaying, okay, a new higher low, a higher high, all right? So we are below it now. So this is the first low as it did below it right now. If it's going to be truly bearish, it must continue to display lower lows, lower high, meaning that we must convert this rising channel into a declining channel on this daily chart. Then we know that there is a bearish momentum that is established, and we are looking for, have I moved some line? Okay, I did not move, no. I want to draw a line here, all right? So for swing traders that are using TSTWSY008, all right? Okay, by the way, I need to mention that we see some activity at www.best-tradingstrategy.com. The trader that is coming to that website need to be careful if you are not a TSTW trader, because we know who are the TSTW24 traders. I just need to mention this very fast. All right. So now, so he was in a bullish channel. All right. He was in a bullish channel. All right. So if it's going to be bearish, he will go into a declining channel. All right, we are going to be in a declining channel, so we will take it on the edge of the declining channel. This is how we want to trade, using, okay, the market pattern, which means the channel, rising channel, declining channel, horizontal channel, and then plus the multiple time frame trading method. We don't want to forget the trading drill. Do not enter the trade as soon as you see a setup, the signal, and a low risk entry point. Why is it so important to follow the trading drill? It's just because sometimes you may see a pattern on a daily chart, on a weekly chart. It may be a bullish pattern. But when you break it down with the multiple time frame trading method, you will not, okay, all right, if it's a bullish pattern, you will not buy because you did not receive, okay, a buy signal, though the pattern is bullish. On the time frame that you see it, either weekly, you see it's a bullish pattern, you don't buy until you receive a buy signal. But if you break it down for a low risk entry point, which means you want to minimize the risk and enter the trade at the right time, sometime you may receive the signal, but okay, the entry point is not good for you, so you pull out. This will save you, okay, wasting a lot of money. All right. I hope you have learned something from this video also about Forex trading on the edge part 2. We were analyzing the dollar-yen currency pair, comparing the US dollar to the Japanese yen, okay, comparing the US economy to the Japanese economy. We were using also what we call the technical analysis. We want to understand that it's not all about the technical analysis, that the Federal Reserve chairman is a market participant. The Bank of Japan chairman is a market participant. The Bank of, the chairman of Federal Reserve Bank are market participants, and their decision can affect this currency pair. When we are talking about currency pair, we are talking about real money that people are using. And if they are going down so fast, okay, the Federal Reserve or the banks, okay, will make decision to correct the inflation. So we want to be aware of it. So do not think that anything that is happening here, the Japanese economy, the Japanese, the Bank of Japan is watching this currency pair. The Federal Reserve is watching this currency pair. These are what we call the exchange rates between the dollar and the yen. If the United States have to pay their debt to the Japanese, they have to pay them in yen. If the Japanese have to pay the United States their debt, they have to pay the United States in dollar. So there is this kind of, currency war going on. So at the time when one country has to pay their debt, they want to pay it at a good value. So if the U.S. economy, U.S. government want to pay their debt in yen, they will prefer the yen to go down. If the Japanese want to pay their debt in the dollar, they will prefer, that the dollar may go down. And also decisions are made regarding the economy data, talking about the unemployment rate, and the market sentiment, the inflation, all this, we must take them into consideration. We have also talked about key levels. The first key level that we were talking about was 10541. That's the high of 2013. As long as this pair is below the level of 10541, we will give priority to sell signal until we reach the next support level. The next support level is the short-term equilibrium price level, which will remain in place for 2 weeks. It's 10327. When the support level is converted into resistance level, below 10541, we will continue to sell until we reach the next support level, which is the media line, of 2013, 9600. If 9600 is converted into resistance level, we will, look for opportunity to sell until we reach the roots media line at 9063. The price can go up and the price can go down. The price can oscillate. Where the price is now is between 10541. The price can oscillate between 10541 and 1327. If it goes above 10541, we must wait until this resistance level, the red horizontal line, is converted into support level before we can be bullish. All right? Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.